Naspers, a company we all know very well, is a multinational media giant with stakes in internet businesses in emerging markets, pay TV and print media. The group's most significant asset is a 35% stake in Tencent, which is a Chinese internet company, and it wholly owns Multichoice in Africa. The company has a whopping market cap of 909 billion rand, a PE of 81, and a dividend yield of 0.25%. So
only
we actually had results
payer
on Friday on this one. Eh?
And only dividend payer in this group, by the way. Very interesting.
Not very generous, but the dividends.
We had results and it came in very strong. We know that Tencent has actually, over the past 3 quarters, just blown the lights out. It's been way better than anyone has sort of given them credit for or anticipated. And that actually makes up, when you look at the share price and sort of the market cap of Naspers, makes up more than the market cap. So you actually buy Tencent when you buy Naspers for a discount at this stage. So there's a lot of other factors that we can actually discuss that plays into that. You're getting the ramp then for free, which is the multimedia business locally, or the Multichoice business locally, and then all the classifieds, which is actually also doing quite well for them. But there's a thing, and that's the SWIX. They're capping the SWIX. They're making a new index called the SWIX, the capped SWIX. And I think a lot of fund managers feel uncomfortable with holding about 18% sort of market weight.
In this Chinese internet company that is quite hard to understand for a lot of people.
Despite the fact that it could be a fantastic company, it doesn't matter who the company is, it's still very, very risky having your benchmark with about 20% in one share.
Having said that, though, I mean, we often look at Naspers as a mini technology index in its own right, because we don't have access to that many technology businesses through the JSE.
That is true, though. I think that's very, very good case you're raising. But the big thing here is that a lot of fund managers are actually going to migrate away from the SWIX to the capped SWIX, and that's actually going to lead to indices and other stuff selling these they're holding in Naspers, and I think we've sort of seen a bit of that pressure coming through in the market already. When you consider that, probably going to lead to quite a nice selling opportunity for the individual shareholder out there.
I want to focus now on the social media aspect, because we know the e-commerce side and the Multichoice DSTV side. So that is predominantly in Tencent. They own 35% of Tencent. Now, Tencent's 2 main platforms is WeChat, where they got over 800 million subscribers, and QQ, which also has over 800 million subscribers in China.
And fast reaching, sort of going for the billion level. So those, like you say, I mean, gaming, big there, and then WeChat, which is actually very sort of innovative when it comes to what they offer. They're not just a messaging platform anymore. They offer sort of parcel delivery. You can order stuff on it. You can order food on it. It's sort of like it's like a Uber. It's everything that Uber has to offer already in there. So yeah, I think it's going to be. It has the potential to be sort of substantial competition for company even like Uber, and then WhatsApp, and then Messenger and all those. So there's a lot of components into one here, like you say. So they've got sort of a very diversified footprint in what they're actually achieving. And then obviously the gaming income that they have there. No one really understood that initially, because no one can actually understand how you will be paying. Well, we're probably way too old for that, but how you will be paying to play games online. But people actually do that, so they're making quite a lot of money out of that as well. Yeah,
I saw an interesting stat. So apparently Tencent dominate 13% of the globe's gaming revenue.
That is so
just
crazy.
One business, and that's $100 billion industry.
Yes.
So and I think there's still huge potential. Like you said, what Facebook want to do with Messenger, WeChat have already done.
Exactly.
So instead of having to go to different apps, you go to WeChat, you can get your taxi. They own a stake in JD.com, which is Alibaba's big competitor in China. So you can do your online retail. You can order your food. You can play your games. You can chirp your mates on the gaming platform, while you're killing them.
And you can chat to your mom.
Yes, all at the same time.
So it's all sort of in one package, which is
and the monetization is there, which is key.
Exactly. And then the fact that Naspers owns such a major stake in this business. I mean, this business has actually come out and changed a big part of the landscape, not only in China but worldwide when it comes to social media platforms. And Naspers is actually the main shareholder there.
I guess the big concern when the results came out was that the Multichoice business, which has always been the cash cow, is under pressure because the rand's weakened, the content they have to buy is in dollars, they're struggling to push that onto the consumer. So we're seeing sort of, in terms of valuations, a bit of a loss pulling back the rest of the business.
That's
but I
true.
think for the long run, people must realize that a lot of those funds are also going into e-commerce, which looks huge for the future.
It's true, they have e-commerce businesses in Russia and sort of in many developing countries where there are small footprints when it comes to...
Big push into India at the moment as well.
And when you look at their classifieds business, they're already making money off different sort of ads as well. So there's a lot of sort of different moving parts here. Like you say, it could be an index on its own. But and they're not even monetizing so much on a lot of those, and I think it's sort of similar to when you compare to Google, where they own the majority of their income from the advertising. They have all these other little catalysts that could be big things going forward, and I think it's the same for Naspers.
Well, let's have a look at that graph there, and as you mentioned, there has been a bit of a pullback, along with a lot of other technology stocks. So you think this is a good buying opportunity?
Well, I think if you can buy Tencent at a discount and a growth company like this at a discount, then it's probably a good opportunity to get hold of it.
And I think as Tencent gets larger and more relevant, a lot of US investors are starting to wake up to this giant.
Yeah.
And a lot of them are actually, I've seen a lot more articles in like Barron's and Wall Street Journal referring to Naspers as a discounted entry into Tencent. So as that gets more leverage, I think we might get a lot of foreign investors coming in for that.
I agree, and I think the fact that Naspers has now gone and changed the reporting into dollars at the end of last year, that also makes it sort of more known and comfortable for foreign investors like people from the US.
Cool. So you're going to be hot on Naspers?
I'm hot on Naspers.
It's been a long-standing position in the hot stocks portfolio, and we're going to remain hot on that one.